Give it up for Danielle DiMartino.
Danielle DiMartino.
Danielle DiMartino Booth. Strategist Danielle DiMartino Booth. And so, Danielle, what I thought was compelling about the Bloomberg piece, like a lot of these efforts to sort of diss the administration, had a lot of contradictions. They also had a chart in there that, to me, actually proves that this administration is doing a lot, because this is how you measure it. Lower yield bond yields, lower crude oil, and a lower dollar. That's the recipe for Trump and company. They say this is the recipe to spark a second American century. What are your thoughts?
Well, Charles, I do think that if you're stating those goals in isolation, that they have certainly been met. But, you know, the Wall Street Journal had an interesting story out last week that noted that the top 10% of American earners are responsible for 50%, 49.7% of spending. So to the extent that that lower yields are also accompanied by losses in riskier assets such as stocks or cryptocurrencies, then we could begin to be flirting with an issue if that top 10% that controls half of spending decides to be a little bit more reluctant and start to close up their wallets as their portfolios take a hit.
Right. So the idea then is to somehow protect the top 10% at all costs so that the stock market's higher?
No. Oh, my gosh, no, Charles. What I'm trying to say is we have to look back to history, right? Ronald Reagan is remembered as one of the best U.S. presidents in history. People forget that when he came into office in 1981, that he slashed federal headcount and actually put the economy back into the double dip recession of 1980 and 1981. Now, Charles, that did not last for long, and deregulation and other things that parallel the beginning of this administration ended up taking over and brought the economy out of recession. We just might be in for some short-term pain here, which the prior administration was not willing to take, and put the country on much weaker footing because of it. And we're learning, by the way, one revision at a time. We just had another one out a few days ago, that perfect economic track record is being rewritten as being anything but, Charles.
No doubt about it. And I agree with you 1,000% that, you know, when you change something that's like this, a lot of cash floating around, maybe there's a little temporary pain. We also call it investing. Hey, you know, one thing I want to ask you about. So we've seen waning consumer confidence and sentiment numbers recently, but CEO optimism, it's gone from cautious confidence to really very confident. What are they saying? What are these CEOs saying that maybe we don't see in the headlines?
Well, Charles, actually, we just published on that, and what the CEOs are excited about, I hate to say, is that they're going to be cutting more headcount. And so the percentage in the first quarter compared to the fourth quarter who are planning on hiring freezes and reducing the number of their workers. I think Google was just out on the wires that it's cutting more of its staff, Starbucks, Southwest Airlines. But the private sector right now, optimism is up because they know that they're going to be cutting costs more, and that's going to be very shareholder friendly. Again, I wish, Charles, that the private sector job cuts would stop, because we have public sector job cuts starting. But right now, CEOs are excited because they're planning on continuing to cut costs in order to improve their margins.
What's interesting is that, for the last 4 years, economists said we had to have open borders and not even send back people who come here and commit additional crimes because we had no one who wanted to work. Hey, I got less than a minute to go. Manufacturing, the needle's beginning to move there. What's going on?
So, Charles, I think we need to be very careful about what we're seeing in the manufacturing sector. There was a lot of front loading in front of potential tariffs. But as we saw out of the Dallas Federal Reserve yesterday, of course, the biggest exporting state in the nation, the second largest manufacturing state in the nation after California, we saw some really weak numbers inside of that report, and some warnings that the demand is just not there. We have to be careful, and I'm happy that it's Treasury Secretary Scott Bessent, by the way, because I think he is going to be careful in how tariffs are rolled out, so we don't, give a further hit to the industrial sector.
Thank you very much.